The real reason Bitcoin just hit 110k, not what you think. Bitcoin recently hit 110k and no, it wasn't just hype or technicals this time. This move wasn't random, it was orchestrated. There is a much bigger story here. I'm Neil, and today we are going to connect the dots. How politics, regulation and institutional capital came together to fuel this rally. So, if you want to understand what's really driving Bitcoin's price, stay tuned. We have seen rebounds, corrections, and a wave of global events shaking the markets. But what's the real story behind Bitcoin's movements? Let's break it all down step by step. From macro headlines and geopolitical shifts to on-chain data and market psychology. Here we go. First, let us go to the battlefield, the heat map and Wells movement analysis, to see what the price is telling us. Bitcoin opened today at 109.7k and moved sideways for a while, stuck between two big liquidation zones. You can see resistance sitting around 110.7k and support down at 108.5k. From there, the price slowly dropped to 108.9k. Then momentum kicked in, and Bitcoin shot up sharply to hit 110.3k, but it didn't last. The price collapsed back down to 108.6k, triggering a big round of long liquidations. It tried to bounce from the support zone, but that rebound failed, and the price dipped even lower, briefly touching 108k and triggering a round of long liquidations. Since then, Bitcoin has slightly recovered, and at the time of this video, it is trading around 108.5k. Now, let us take a quick look at the liquidation zones. The first resistance area is at 109.7k to 110k, not too thick. But the next one, from 110.4k to 112.5k, is heavier, with a strong resistance line at 110.7k. On the support side, we've got a key zone between 108k and 107.4k. And that's pretty much it. Conclusion? The resistance zones are thicker and more heavily stacked than supports. That means it may be harder for Bitcoin to break upward unless serious buying pressure kicks in. Right, time to dive into the whale moves. We will start with the brown line. That's the big guys placing orders between 1 million and 10 million USD. They're still buying. In fact, they are the only ones consistently keeping the buy pressure alive. But look at the rest. Smaller players below that brown line are dumping volume fast. See those lines? All trending down. That's clear selling pressure from mid-sized and small traders. Right now, sellers are in control of the total order volume. When whales fight, shrimps suffer, you might say. But the gap between buyers and sellers isn't huge. So, the situation could flip quickly, depending on what the big players decide to do next. The market needs a stronger follow-through to confirm a full-scale bull run. But, behind the charts and the trades, something much bigger is brewing. Policy changes that are shaping the entire crypto environment. Let us start with politics. The first big spark? The US rolled out something called the Clarity Act. It finally defines who regulates what. The SEC handles securities, while the CFTC takes care of commodity-like tokens. This is massive. Why? Because it's a green light for investors. You can invest without fearing handcuffs. For the first time, the government is basically saying, yes, this space is legit. But regulation is only one piece of the puzzle. To truly understand Bitcoin's momentum, we also need to look at the bigger picture. What is happening in the global economy and on the geopolitical stage? Because even with legal clarity at home, uncertainty abroad can still shake the markets. So, I have been watching the consumer price index closely, and the results came out better than expected. Inflation seems to be cooling down, which should be good news, right? Well, despite that, stocks and Bitcoin took a dip. Why? Partly because of rising geopolitical tensions in the Middle East. The US just ordered non-essential staff to leave the embassy in Iraq, and oil prices jumped over 4%. This kind of uncertainty tends to pressure asset markets across the board. Plus, the upcoming US-Iran nuclear talks add more risk. If talks fail, Iran might retaliate by threatening US military bases in the region. Meanwhile, ongoing trade uncertainties between the US and China are keeping investors on edge, even though President Trump says negotiations are nearing final approval. With all these mixed signals, markets are jittery. Trump even called for a 100 basis point rate cuts after the CPI release, which, if it happens, could ease debt burdens and spur markets. But we are also watching the upcoming producer price index data and the Federal Reserve's next moves, because both will shape how Bitcoin and stocks behave next. Then came regulation, the good kind. The Blockchain Regulatory Certainty Act, or BRCA, is a game changer for DeFi. It says, if you're just offering smart contracts and not holding users' money, you're not a regulated intermediary, and that is huge for developers. For years, builders lived in fear of getting blindsided by regulation. Now, they finally have a clear, legal path to innovate. And when builders feel safe, it sends a powerful message to the rest of the markets, especially institutional investors. Because if the infrastructure is legally protected and the rules are becoming clearer, the big players start to move in. Here is something interesting. Nasdaq-listed companies are quietly stockpiling Bitcoin. Mercury Fintech, a fintech firm, just raised around $1 billion to buy Bitcoin. Why? Because on-chain data tells a story of shrinking supply. Bitcoin holdings on central exchanges have dropped by 14% since early 2025, reaching their lowest since August 2022. At the same time, OTC desks handling big trades also show a 19% decrease in Bitcoin held by miners. What does this mean? Long-term holders are moving coins off exchanges into cold wallets, reducing the Bitcoin available for trading. This shortage of supply, combined with steady demand, sets the stage for a big price surge once the market turns. Even the funding rates, a measure of trader sentiment, dipped into negative territory briefly, a sign that bearishness was still there, but demand kept soaking it up. Historically, after such dips, Bitcoin has rallied hard. Next, we've got something that goes beyond code and charts: self-custody. New laws in the US now officially give citizens the right to hold their own crypto in personal wallets. This isn't just about technology, it's about freedom. Even SEC officials called it a reflection of American values. Think about that. Your wallet, your coins, your control, now protected by law. Despite all these positive signs, the price hasn't exploded yet because retail investor sentiment is still building. Positive comments about Bitcoin on social media are double the negative ones, at the highest level since Trump's election, but the market tends to pull back before a big rebound. So, don't be discouraged if prices wobble. This is just the calm before the storm. Also, new liquidity, the fresh money that fuels big moves, is only starting to edge in. Investors are split between waiting for breakouts and taking profits if momentum stalls. The market needs a stronger capital influx for that major rally, and once the price ticks up more, that inflow usually follows naturally. Indicators like the Pi cycle top suggest we are nowhere near the peak of these bull markets. If past cycles repeat, Bitcoin could have a long, strong run ahead. And when you mix clear laws with legal rights, you get capital. Big capital. Let's talk numbers. CRCL, a new crypto company, launched an IPO and hit 28 billion USD in market cap, nearly 4 times the original offer. Plasma Foundation? They raised 500 million USD in under 5 minutes. This isn't retail FOMO. This is institutional conviction backed by legal clarity. Switching gears, altcoins are also showing signs of life. Important signals suggest that once Ethereum gains momentum, other altcoins could follow. Ethereum option data shows investors betting on short-term gains, which is bullish. On the regulatory front, the US Senate is gearing up to vote on a stablecoin regulation bill next week. If it passes, Bitcoin could rally strongly. If not, expect some adjustments. This bill is seen as a key to making the US a crypto capital and could push stablecoin demand over 2 trillion USD. And for the lesser known news, Ukraine's parliament proposed letting the national bank add crypto like Bitcoin to national reserves, showing adoption on a state level. Plus, Rumors about President Trump's sons making major crypto announcements on June 16th have everyone watching, though past announcements have had mixed effects. Well, can't be too careful when you know the man. So, here's the real question. Did Bitcoin hit 110k purely on technicals and momentum, or was there something deeper at play? What we are seeing isn't just another rally, it's a coordinated shift. Politics set the tone, regulation provided the framework, and institutional capital brought the fuel. This move was not random, it was engineered. This is what it looks like when the system finally starts working with crypto, not against it. Now, let's be clear, we are not in full breakout mode yet, but the groundwork for a powerful rally is already laid. We are talking about legitimacy, scarcity, and long-term conviction. And whether you're a trader, a builder, or a long-term holder, this changes everything. Because what's coming next won't be about hype cycles or short-term price swings. It will be about structural shifts, policy clarity, legal rights, and massive capital alignment. The rules of the game are being rewritten from top down. And those who understand why things are moving, not just how, will be the ones best positioned. So, here's the takeaway. This wasn't just momentum. It was the result of a tightened supply, institutional conviction, and political clarity all converging. And that's why patience right now isn't just smart, it's strategic. Zoom out, watch the narrative unfold, and prepare for what's next. That was Neil. If this helped you see the bigger picture, hit that like and subscribe button. As always, stay sharp, stay informed, and get ready. Because the next leg up won't be random.